are very important for remittances. And then talking a little bit about settlement. We touched on settlement as well last week as well, and that was, I think, an important discussion about how does settlement really work. So let me know if you can't see my screen at the moment. I'm just going to go full screen, so I won't be able to see the chat while I'm in full screen, but we'll break every couple of slides, and if there's any questions, shout out and let us know. So we'll get started. So I mentioned last week as well about stable coins, and we spoke about how does money move with Bitcoin as an example. So you'll remember the chart, which I think maybe we don't have it. We don't have it today, but there was a chart last week, you might remember, that was essentially you have cash at one end, you buy Bitcoin with it, and then you sell the Bitcoin at the other end, right? And that's generally the common process, right? So you've got this intermediary thing called Bitcoin, which you use to transfer the value overseas. Now, that's well and good, but it means that you essentially have to do two transactions there, right? Like you have to buy the Bitcoin and then you have to sell the Bitcoin in the different currencies. So there is a difference there in terms of well, what's the price you're buying at and what's the price you're selling at, and making sure that they match up. Maybe one is good, one is bad, and being able to look at that whole process. And there's a lot of sort of technical stuff involved in doing that as well, and automating the trading and doing all this kind of stuff. So it would be much easier if we didn't have to really take a risk on the price of that Bitcoin, right? Like, what if I buy it for $3,000 here at this side of the world, and then I sell it for $2,900 at the other side of the world? Well, that would be bad, right? Because I bought it for a higher price than I've been able to sell it. So there is a risk there when you deal with using something which has a value like a Bitcoin in between. And I've spoken before about ways to mitigate the risk, but one of the interesting ways coming up is with stable coins. And essentially a stable coin is, it's in the word, isn't it? It is a coin which is stable to the national currency. So we call it's pegged 1-to-1 with the national currency. So one stable coin is equivalent to one unit in the national currency. So it might be one GBP coin, yeah, and that GBP coin would be worth the same as one GBP, and you can think of it like that, and that's possible in any currency in the world, and that's a really cool thing here. So but before we get into that, we have to talk about what is a stable coin, because there's different types. We've got trusted and we've got trustless, right? So some of the largest stable coins, and to give you an example, they're probably a more recent phenomena, probably maybe 2-3 years ago, they sort of came onto the scene. The largest of which is called Tether, and that's a stable coin. And essentially it's a company called Tether, and they have a bank account. They are some company, I think in Puerto Rico or something like that. And when you deposit $1 with them, they will give you one Tether coin, right? So essentially the value of their Tether coin is backed by them. You have to trust them. They have the money in their bank account to back the amount of coins which they issue to you. So this is what we call a trusted stable coin, whereby if you have 1,000 coins in circulation, well, you want to have $1,000 in reserve to back them. And Tether's bank account went from $0 in 2016 to something supposedly about $3 billion today. So even if they do nothing, they still have $3 billion in their bank account, which I'm sure they can earn some interest off, if anything. So so for them it worked pretty well. But essentially you got to trust them. So we've got here trusted stablecoins. Reserves should be audited. It relies on a trusted third party, often under some regulatory regime. Some are not. Tether is not, and it's the largest one as well. But in the last 12 months, we've seen different companies come along, like Gemini and Circle, which have, they have a regulatory regime of which they're under. The money is held in trust accounts. The company can't touch it. it's publicly audited, and you can redeem that money with the company at any one stage. So if I have a Tether coin, I should be able to redeem it for $1. So that's the main thing, is your stablecoin redeemable? So you can imagine that with these trusted coins, sure, you could be regulated or not in the case of Tether, and it's all about sort of assuring people that you're good for the money, right? But you also have trustless as well. So trustless, I think, is a much better concept, because essentially if we have to trust some company or some bank, you've got a lot of risks there, right? Like, what if the bank closes their account, which we'll get into later, and that's a big problem in the money transfer industry, right? De-risking. What if the bank says, yeah, we don't want to deal with you? Or what if the company has some problems and the company shuts down, or the directors leave, or something like that? Got all these risks dealing with them. So what a trustless stablecoin is essentially, instead of having the collateral held at a bank, it is essentially crypto collateral. So the collateral is in crypto itself. So instead of a US dollar in a bank account backing it, it might be a Bitcoin backing it. Now, you can imagine that if you have a cryptocurrency like a Bitcoin backing it, well, you can prove all of that. And we spoke about the blockchain, and everybody can see all the transactions. So if I say that I have one Bitcoin backing $3,000, then that is pretty reasonable, because the current price is $3,000, $3.5 for a Bitcoin. So I can prove that I have the backing, and I don't have to trust anyone. I don't have to pay a big auditing company a bunch of money in order to prove that I have the money that I do. So there's a couple of examples of trustless stablecoins, BitShares and Ethereum. BitShares was the first one in about 2014, where they started this concept, and Ethereum has a stablecoin that is trustless called MakerDAO, and that is essentially pegged to the US dollar. So that's the largest currently. So the collateral is in crypto. You don't have to trust anyone, and it's there on the blockchain. You can see it, and yet you still get to transact with this stablecoin, which is pegged to the national currency, and that's much easier when you're sending money overseas. Settlement money transfer industry problems. Well, so actually yesterday I was on Bloomberg, and they asked this question about why would you use a stable coin for money transfers like within the same country, right? Like I mentioned a GBP coin before, like a British pound. So if you're doing an interbank transfer, often in many countries you have to pay some money for that. Now, some countries it's free, but not all of them. So here in Hong Kong, it's about 150 Hong Kong dollars to transfer money from one bank to the other. So what if I want to send $1, or what if I want to send 0.5 of a dollar? Well, I can't. It's actually impossible. So you have to find some sort of other mechanism to do these low value transfers, and that's essentially what settlement is it's being able to pay someone the money, and using a stable coin makes it a lot more effective if you are able to pay someone the money, because you get access to these microtransactions. When we're talking about the remittance industry, many transactions, they're not large, as some are, but usually it's in the range of a couple of $100s, or people could be sending even less than that, and usually people would send even less than that, but it's just not economical to send $1 from the UK to Nigeria. There's just no way to easily send a dollar. There's just too many fees and so on. So one of the problems to solve is the settlement, and there are a lot of problems around having settlement actually work between companies. So often if you're in a new country, you have to deal with 1 to 3 different partners. If you're a remittance company, let's say you want to access a new currency or a new country or a new payout method, well, who are you going to talk to? You're probably either going to have to go physically to that country and physically set up a company and a bank account, and that will take 6 months, and it's just a really long process, or you're going to go to some company which already does that for you. But the problem is that there's not that many companies that do all of that for you. So you don't really have much choice. And in some countries, maybe there's only one company which does that, and everyone has to go with them. So, you're never going to get the best deal because everybody else is with the same guy who's paying out at the other end. And certainly we know this in the remittance industry where, the payout partners are very crucial. And, some people, focus on the sender side. So, in, say, the UK, sending money outwards, and some people focus on the recipient side. And there's different business models with that, but often there's not really that much choice in terms of paying out the money at the other end or receiving the money on the sender side as well. So, if there is more choice, and we'll get into, how a stablecoin can effectively, help that, then it's better, right? So, and also we've got here, integrating every individual payment partner. If I have to go and integrate to do another, if I want to service Latin America or South America, and if I have to go and integrate 10 different payment providers for 10 different countries, well, that's going to take a lot of time and money, which people don't have. So, it's much better if you can integrate with one person who does everything, but maybe they don't have the local payment mechanism for that country. Maybe everybody pays each other in prepaid cards in that country. Maybe everybody uses mobile money in that country. You are at the mercy of maybe the bank at the other end, the currency, or the payout partner as well. So these are some of the problems that we face when we're talking about settlement. Paying the money to the other end. So what does a stablecoin bring to the floor? Well, essentially one of the big things is that accessing currencies is hard, right? So there's 180 currencies in the world. And often when we're sending money between each other, people, the US dollar is usually used, but when you're paying out in different countries around the world, they're usually paying the local currency, right? They're paying the guy at the other end with the physical cash shop, he's paying out that local currency. So often if he, gets euro or gets US dollars, he's taking a risk on that, right? But, he's getting US dollars in his bank account, but then he's paying out a different currency. So if you can have the ability to transact in all of the different currencies in the world for free digitally, well, that's the best, the best method, right? Because I can't call up HSBC tomorrow and say, hey, HSBC, I would like 100 currencies in my multi-currency account, please. Then it's just not going to happen, right? So it doesn't exist. And often, I think there's only about 30 currencies which are available outside their national borders. So what about the other 150? If I want the other 150, I have to physically go there. So, if I can have a stable coin for those different currencies, well, I can just log in, to, an online website and be able to buy and sell that currency, effectively for free. And that's really one of the big benefits, is being able to access some of these currencies that were, much more difficult to be able to access previously. Now, I've got another one here, hold balances in local currencies. Now, I gave the example before of the guy in the payout country. I usually use this example because we've had some interest here, but let's say Sri Lanka, right? The Sri Lankan rupee, it's not something which I can easily get access to in my bank. I need to work with somebody who can get me access to the Sri Lankan rupee. And if I want to hold a balance in the Sri Lankan rupee, well, how am I going to do that? Usually I have to physically go to Sri Lanka and have a bank account there, and set that up, and that takes a whole bunch of time, and then I need to get regulated, and I talk to the local regulator and blah blah blah, or I need to deal with somebody. And usually when you deal with somebody in a recipient country, usually they're not going to hold a balance for you. They're going to pay out that currency once and done. You pay me the euro or the British pounds or the US dollars or something, and then I pay it out, it's done. So, and that's because they don't really want to be, holding any currency for too long, because as I said, if they're receiving euro and they're paying out Sri Lankan rupee, well, there's an exchange rate there, right? So they don't want to be exposed to that. So, if I can essentially pay my guy at the other end in the local currency, so I can pay him, 10 digital rupee, and then he can pay out 10 physical rupee in cash, well, that's the best method, because then he's not taking any risk. And, I can hold that balance for as long as I like. I could do it for a week, a month, whatever. It doesn't matter. It's rupee. He's getting rupee and he's paying out in rupee. And it makes it much easier as well to manage, FX and fees and currency exchanges. And another one, the final one here as well is, I said if I went to Sri Lanka, I'd have to deal with a bank, right? I'd have to open an account. In many countries, it's not easy. So if I can actually hold a balance in that digital rupee without the need for a bank, well, it makes my life a lot easier, because I don't have to deal with banks. and I can get access to all of these different currencies around the world. So that's really some of the key concepts for stablecoins and settlements, and something that we're really excited about. So jump in if there's any questions so far before I go on. I'll just check chat in case there's anything, but if not, I'll proceed. Is there anything you wanted to add, any of the RemitONE guys? We'll continue. So essentially, I mentioned before, dealing with banks, and dealing with banks is often hard. And one of the reasons it's hard, and we all know this, is because of de-risking, right? And for those unfamiliar, or for those watching at a later date, de-risking is the process of a bank exiting the remittance industry and closing your account, essentially. And this is something that we see all over the world, where banks sort of are leaving the money transfer industry and are more happy to not be engaged in it, and essentially close accounts of companies which have done no wrong, are often licensed for decades in their local jurisdiction, but the bank has just decided that it's not something of which they want to do. So essentially, one of the great things about stablecoins is, well, we don't need banks. So you don't need a bank to transfer money. And using a cryptocurrency in order to do that, we've had many clients in the past that, and we have clients today that still use our system that don't have bank accounts, and they're just using, they have cash at one end, they convert it to the local cryptocurrency. It might be Bitcoin or something else, and then they send it overseas. So they don't actually need a bank to do that whole process. And that's a really exciting thing. So when we're talking about de-risking, is it a solution to the problem? Absolutely. Crypto is a solution to de-risking, and we don't have to look too far. Another sort of way to think about it is, well, if I have cash in one end, and usually if I'm a remittance company in the UK and I have cash, usually the process is I take that cash to a bank, and then I give it to the bank, and then I am able to pay my money transfer partners wherever they are in the world, because I can just send them the money via my bank account. But of course, if the bank is causing me problems, or is de-risking me, or doesn't like my particular money transfer partner, then that's clearly an issue, right? So, but the problem to solve is the bank in between, between you and your partner, to settle that payment. So the question is, if you have the currency, well, how are you going to deposit it somewhere in order to get it to your partner at the other end? And one solution for that is what we have is vaults, it is a physical vault where you can store the cash, and this is available in a number of different countries around the world. In our system, it's about 25 different countries around the world where this is available, but similar process is used by other companies as well. But essentially, the vault is a way to receive the cash in a secure location without having to physically deposit it at the bank. Now, once the money is there, we can go through the process here, right? So you've got a remitter, you've got an MTO, so the remitter is going with his hard-earned money to the money transfer company, and he's putting on the counter, let's say $200. That MTO needs to essentially get that to the beneficiary at the other end. You can see on the right-hand side there. Now, how's he going to do that without a bank? So one option is that that MTO will deposit that money, the physical cash, at a vault with BitSpark, and essentially we take that $200 that we see in the vault. We go, yes, you've just deposited $200 with us, and we credit you in your account with 200 of a stable coin. So we might give you a Tether if you want, or Gemini, or Circle, any of these US dollar stable coins. And with that, you now have the ability to log in to your account, in BitSpark online, and click a few buttons and send the money to the MTO at the other end. So essentially you've short-circuited the whole need for a bank in that case. And the critical component here is that you're depositing the cash at the vault, and then that cash is being turned into a stable coin, of which is then being used to send money to the MTO at the other end, who then pays out the cash. So the workflow, I think, is pretty simple, but maybe there's some questions on that. But the use of a stablecoin means that you can do this in pretty much any country or any currency in the world, which is super exciting. And it also means that you can do it without a bank. So we've.
Can you clarify the difference between the two MTO icons, the one on the left-hand side and the one on the right-hand side, for the audience, please?
Yeah, so essentially one side is the sender side. So on the left-hand side, we've got the MTO, let's say in UK, and on the right-hand side, we've got the MTO, let's say in Nigeria, and he's on the receiver side. So the whole process is essentially end-to-end. If somebody walks into an MTO in the UK with some cash, that UK MTO is able to visit a vault to deposit the pounds, and those pounds are credited in the system to then be able to be sent digitally to the MTO at the other end to be paid out to the beneficiary. So the workflow is essentially, instead of bringing your cash to a bank, you bring it to a vault. So it's not too different to the current workflow.
Brilliant. Just one more thing. Can you also please, for the benefit of the audience, clarify if the RemitONE client would need to have a direct relationship with the Nigerian MTO in this example? Or will it be a relationship, a pre-existing relationship between BitSpark and the Nigerian MTO?
Yeah, so you don't need to have an existing relationship in order to use the system. So we have people who sign up to our network, a number of different MTOs in different countries. If you want to specifically utilize your relationship with that MTO, you're welcome to let them know to sign up to the system. It's free. It takes 5 minutes. And it doesn't take too much effort on our side. If they're plugged into the RemitONE system, everything's good. So you can just not have an existing partner at the other end. You can use whatever is in BitSpark's network for the payout, or you can essentially let your partner know that you're using this new system and bring them on board as well.
Great, thank you.
No worries. Is there any other questions on this process as well before we look at the next couple slides? I think we've covered a few different topics there, but I think the main point is you'll see the workflow is quite similar to what we had previously with using Bitcoin in between. But the main difference, I'll go back up here, is it just makes settlement a lot easier if you're using a stable coin, which is the same as your national currency. And the whole concept of being able to access any currency in the world means that it opens up a lot of interesting avenues for you to look at. So we've spoken to different FX funds or MTOs that want access to various currencies that are often hard to do. I mentioned the Sri Lankan rupee. We've had people asking us in various locations in Africa where the local currency is perhaps very difficult to access, certainly for us here in Asia. And there's other sort of local currencies here in Asia which are difficult to access for the rest of the world. So being able to access them digitally for very low cost is really exciting. So that's what we're very excited about. And this opens up a whole sort of new avenue. And ultimately, what does it mean to the MTO? Well, better rates, cheaper, faster transactions, and the ability to send smaller values. One interesting thing that we got from a recent conference was that the point was made, and I think I mentioned it last session as well, was only 3% of the world's, I think, 2,000 money transfer systems are connected together, right? So if you want to send your M-Pesa to Bcash in Bangladesh, they're not connected. You know, who are you going to go with? You know, that's hard in order to navigate all of these different payment providers all around the world, and the different currencies and the different options and so on. And often the problem is it's settlement. You know, how are you going to settle a transaction from, you know, M-Pesa in Kenya in Kenyan shillings, you know, to Bangladeshi taka? You know, there isn't a huge, you know, FX market for that already. You often have to go through several intermediaries if you were to even look at that. And the more intermediaries that you go through, the worse exchange rates, and the more hands it passes through, everybody takes a clip, particularly the banks. And at the other end, you don't have a very sort of compelling product. So if you could go directly, you know, currency to currency, you know, that would make things a lot easier as well. So so that's one of the key concepts for settlement. So yeah, we've discussed a little bit about stable coins. We've discussed.
Sorry, George. George, can I just add also the intermediate, not just the FX, obviously it's going through many hands as well. You're also looking at intermediary bank charges. From my experience, when I used to work for for FX provider, you're looking at about $20 if it's not going through an ACH network, your usual sort of automated clearinghouse. So if you're going through the usual channels and it goes through an intermediary bank, you can expect $20 to be shaved off each payment at the very least.
Absolutely, and you know, and then there's correspondent banks as well. Another story and a side note, I was talking to some of the post offices that are sending from Europe to North Africa, and they were saying that some of the payment terms, you know, for their correspondent banks is like 45 days. So, you know, the post office at the recipient end, he has to pay out the cash to the recipient, you know, pretty much instantly, right? So he's out cash. And it's not for 45 days until he gets paid his money. So, you know, he's got to have this big cash float at the other end in order to pay out all of these people, which I thought was incredible and you know, really inefficient. But it was mainly down to these correspondent banks, because, you know, they're the ones in the middle which you know, it connected to Swift and everything, which are, you know, routing these transactions around the world, and particularly if it's to, you know, a less developed country in terms of financial networks, then, you know, maybe there's only a few banks which actually, you know, payments go through. So it just adds a lot of time and money and cost to that transaction. So, you know, I don't think that should really exist in 2019. So we yeah, I mean, so sort of to wrap up the Q&A session, we've spoken a little bit about everything here. We've got the vaults and the de-risking. We've spoken about the settlement and the trusted and the trustless as well. So if there's any comments on that, there's quite a bit of depth to how far you want to go on that. But fundamentally, I think that if you don't have to, you know, trust the value being there tomorrow, then that's probably the best way to be. Yeah, but both are good. So I'm happy with trusted stable coins. I'm happy with trustless stable coins. But the point is that stable coins in and of themselves are very useful for money transfers.
Can I ask a question? This is Daniel.
Sure, go ahead.
The trustless stable coin, I don't know if I could take you back on that a little to go over it again. I didn't get it when I came in.
Yeah, sure, no problem. So what I spoke about before with trusted, essentially I got to trust a company that they have the money that they say they do, right? Like I've got to trust a company that if I give them $1 US, they have $1 US in their bank, right? And they can issue me that coin. They can issue me one coin for my $1 USD. And if they have $1 billion or 1 billion coins in circulation, I'm hoping that, you know, if they have 1 billion coins, then there's at least $1 billion there, right? And they should be able to prove that. They should have it in their bank account. You know, so because if they don't, well, that's a big problem, because if there's 1 billion coins in circulation and there's only, you know, $10 in the bank account, well, if you want your money, you're not going to get it, right? And your stable coin is not stable because you can't actually redeem it, right? So so that's trusted, but trustless, well, the reserves, you know, the collateral, the assets, it's not a bank which is holding the money. It's not a company which is holding the money to back these coins. Essentially, it's the blockchain itself. So, you know, instead of me trusting a company which has a bank account, I can put some crypto in the blockchain and I can back a coin with my crypto. So, you know, if there's, you know, 1,000 coins, 1,000 USD coins, let's say, I can back that with 1 Bitcoin, right? And 1 Bitcoin is worth $3,000. So, you know, my collateral means that I have enough collateral to back the number of coins. So it's a little bit more complicated, but you know, essentially you don't have to trust anyone to do that because I can see the Bitcoin on the blockchain. You know, everybody can see it. It's there for everybody to see. It's provable. It's on the ledger. You know, I don't. Yeah, the blockchain has control of it. I don't have control of it. So, you know, if I'm a bad guy or something, I can't run away with everybody's money. But if I had a trusted stable coin, well, you know, maybe I pack up tomorrow my bank account and make away with $1 billion. You know, that's the risk you take. But you know, if the collateral is on the blockchain, well, you know, it's there, it's provable, it's transparent, and it's locked, you know, for the person who needs it. So, does that help a little bit to clear things?
Thank you very much. We can proceed now.
Yeah, yeah, no, it's a really cool concept. So, you know, there's not as many trustless stable coins around, but the ones that do exist, they have a market cap, I think, a couple of $100 million in total. The one called MakerDAO and BitShares as well. So so you know, there's quite a bit of money involved in it, and you know, the trusted stable coins, like I said, it's a couple $1 billion that's involved in that one. So so it's not exactly small fry, right? You know, it's not. You know, we're talking about concepts which don't exist. You know, they do exist and they have for years, and there's quite a bit of money backing them. So so yeah, you know, you can use it today, and we use it today actually in our operations as well. You know, we use stable coins because it's just easier. You know, we can have a customer can pay us in USD and we can get a USD stable coin, and then we can transfer that around the world. That's much easier to move a stable coin than it is to move some actual USD. And I can pay someone, you know, 0.2 of a cent if I want to, you know, very easily digitally, whereas I can't do that with a bank. If there's any other questions, you know, let us know, shout out. We've got a question here.
Sorry, go ahead. Yeah, you have a question from the clients.
Yeah, sorry. So we got another question here in chat. So trusted stablecoins are backed 1-1 with physical fiat currency, and trustless stablecoins are backed by other crypto. Wouldn't it be safer for the MTO to use trusted stablecoin then? Well, that's a good question. Well, it depends what the MTO you know, is looking at. So, for example, if the MTO wants to deposit cash, physical cash, in a vault, then he's most likely going to get a trusted stablecoin, right? Because he's depositing that physical cash. That cash is used to back the coin of which he's receiving. So if he puts in £1,000, he gets 1,000 coins, and the money in the vault is backing that. So we know that the company is good for the money because the money's there in the vault. So maybe the MTO is quite happy to do that, and in most cases, yes, he will prefer the trusted one. However, you know, vaults don't exist in every country, right? So, you know, for us, we have vaults in 25 countries. You know, but what about all the rest? You know, how are we going to service them? And the solution to that problem is using the trustless stablecoin. So we don't need to have a vault in all of these different countries around the world to be able to hold a value in the native currency. So so that's one of the key differentiators there is if you're an MTO in a location where, you know, we don't have a vault, then perhaps you know, a trustless stablecoin is certainly the way to go for you. And you know, we can pay you in that, and you can get paid in that as well. As far as the MTO is concerned, you don't care too much about this trusted or trustless thing. The point is, like, if you pay out $100, you get something worth $100 or 100 rupee or whatever it might be. Like you get the value of which you've just paid out. That's the important thing. Does it hold its value? And we got a follow-up question here. So, are you planning on creating trusted and trustless stablecoins for each currency? So, it depends on the currency. Is the answer to that. So, some currencies we have trusted. So, in places where we have physical vaults, like UK, Hong Kong, Singapore, a couple of other places around the world, Dubai. We have physical vaults that can receive the cash, so they are trusted. And all of the other countries, our idea is servicing them via trustless stablecoins. That we don't have physical vaults in Chad or Mali or anything like that. So the best way to service those currencies and countries is with the trustless ones. Yeah, and if there's any other questions, shout out.
Hello, can you hear me?
Yes, go ahead.
Okay. For the trusted stable coin system that allows the use of vault, the MTO haven't received the money from the remitters. Ends up with a huge volume or each deposit of funds at his disposal, and then it goes to the vault, drops the money in the vault, and then logged on to the BitSpark online platform to credit himself. Now, the question is, this vault, what is it like in real sense of it? If it's not a bank, what kind of a building is it, and what institution or organization represents this vault? And then when I haven't known that, how is settlement done? Because in the end, BitSpark that is at the center of this old scheme, acknowledging the credit and then exposing it for all parties to see, to be able to honor the what's the word now? The redemption of the cryptocurrencies in the other locations, in the destination countries across the network. At one point or the other, those that are redeeming this in the destination location part, the beneficiary walks up to me and he wants to redeem its digital currency for the local currency, and I pay him that money and I credit myself. My crypto balance increases. So at one point or the other, they are also, somebody would be long with somebody would be long with a physical cash, while at other locations there will be some form of shortages where there will be the need to repatriate or redistribute fund across for rebalancing purposes and what have you. So that's my thing. Perhaps I've not gotten the full gist. That's why I need clarifications in this regard.
Yeah, thank you for the question. That is, I understand 100% of where you're coming from, because it's a really great question. So, number one, I'll tackle your question about the vault and who are they. So, here in Hong Kong, we work with a company which has we can discuss later. Feel free to send a message to RemitONE or ourselves. So we work with a global company that essentially their job here in Hong Kong, they have vaults for $50 billion worth of physical gold. Like, that's where the gold that central banks store is. So their job is essentially to provide a secure location. They have locations all around the world that are guarded, special whole security procedures in order to enter them. You know, all sorts of different things which they do to monitor and make sure that the assets there are safe. And that's where, you know, people will store things like gold or jewelry, or cash or artwork, or these sorts of things, right? So their job is essentially making sure that things are safe. So you know, we are more than happy to work with somebody like them, because it's not as if it's, you know, some corner store down the street. It's you know, it's like, certainly here in Hong Kong, it's, you know, you go underground, you pass through several different doors and security checks and, you know, different people, and you have to be vetted and so on. So very secure location, and that's the same all over the world, in order to do that. So, you know, that is where the money is held, and that is where, you know, the money goes. Now, the next point about, you know, being long cash and essentially you're paying out the cash, right? And you get a digital balance in return, right? And that's what you mentioned. So, you know, if you're the recipient MTO and you're paying out, you know, let's say, you know, we'll use an example like the Sri Lankan rupee, right? You're paying out rupee to some guy in cash, and he walks away, it's done. Now your shop is minus the cash, but in your BitSpark, you know, online system, you're up, you know, 100 rupee if you paid out 100 cash. So at the end of the day, your question is, how do I get the physical cash again? Because what will happen usually is that you'll go to the bank and you'll go, hey bank, you know, I've got an account with you, or my partner or whoever, and they're going to pay me to my bank account, and then you walk to the bank and then you go and withdraw the cash again, and now you're good. Well, that's not how it works with our system. You know, essentially, if you are a shop which has no cash, there's a couple of ways that we can do it. Number one is we can just send you a bank transfer, right? You know, that's the easiest way, is that if you really want to, and you have a digital balance of 100 rupee or 10,000 rupee or whatever it might be, we can wire you the money in the local currency to your bank account, right? So if you have a bank and you want to work with them, great, you can do that. The better option though, however, is essentially your shop now has a large digital balance of, you know, let's say bit rupee. Well, that's an incentive for people to visit your shop and provide the cash in our system. Why? Because what we do is essentially we advertise and we connect to the local, what we call market makers in the local countries. That, you know, let's say your shop is got 100 digital rupee. Well, somebody can come along to your shop and give you 100 cash, and he will get you know, 101 rupee in his digital account. So there is a profit incentive there for him to do that. So of course, if everybody finds out that they can make a 1% profit by going to your shop and giving you 100 rupee, well, everybody's going to do that, right? And it doesn't take any effort, because you can just take 100 out of your wallet and then you can get 101 you know, in your mobile app. Now, where does that come from? Well, essentially that is the premium which people are willing to pay in order to re-liquefy your shop. So essentially, you know, we can allow it up to you to control that premium. So maybe one day you've got a lot of cash, right, and you want to get rid of it. Well, in that case, if people come to visit your shop, and, you know, there's an incentive to come with a digital balance to your shop. So maybe I have 100 rupee on my app, and then you've got a lot of cash. Well, you know, you can pay a slightly higher amount, and we cover that in your account, and we do that through the different trading and stuff that we do. So, you know, people will come visit your cash, and the same is true if you have no cash, right? And people can come with their cash to you and get a slight premium on that. So the point is that there is a profit incentive to visit these different shops wherever they might be in the world, because we realize that we don't have local banking connections there, right? So the most effective way to do things is use this premium mechanism. Now, does it work? Absolutely, because cryptocurrencies are traded all around the world 24/7, And in many countries around the world, there's quite big markets for it. So there are a lot of these traders in market who are already doing this, and they are already buying and selling Bitcoin, and they're already charging 3%, 4%, different premiums here and there, and so on. So it's these people that we connect to in order to visit the shops and do this liquefaction of balances, is what we call it. So it's more of a sophisticated concept, but does that help a little bit in letting you know how you get your cash again?
Yeah. But the incentive for opting for this alternative to the banking system, as vis-a-vis the role the banks play in the entire international remittance business, is what I'm still trying to articulate clearly. Because as an IMTO who has interfaced with the market and then receive funds on behalf of the remitters to transfer such funds across to various locations in many countries around the world, and that implies that I'll be closing with each fiscal and cash balances, and then this option is saying I need to locate the vault, take the money there, and lodge my money there to get the digital to increase my digital balances in cryptocurrency. So what the point I'm trying to make it, so it's still the same pain that it takes today for such an IMTO to take his money to the bank. So except that we are saying the vault system offers a higher level of proximity to the IMTO, whereby there is no risk involved. Otherwise, it's still the same. It's still the same. It's still the same demands or risk involved. That's the point I'm trying to make. Did you get my question?
Yeah. So
what's the incentive?
Yeah. So the incentive, right? So a couple of things. Number one is the physical cash can be picked up in a secure van like a G4S. So we do hook into G4S and other distributors around the world which can pick up the cash directly from your shop, and therefore you don't need to go and find the vault in the physical location and bring it there yourself. So they can take it for you. So that's the first thing. The second thing is that what I described at the recipient end here, the act of somebody visiting your shop and either giving you a physical cash or giving you a digital balance for a premium, that can also apply in the case of the sender side. So I didn't discuss this, but on the sender side, you could also be a shop and say, look, I've got 10,000 pounds on my physical counter today, right? If somebody comes to my shop and gives me the crypto directly at my shop, then I don't need to visit the vault. I don't need to visit a G4S van to come. I can get that crypto from that person into my Bitspark account digitally, and then I can send it wherever. So that is another option as well, which we don't have a good diagram for that one, unfortunately, but it is also an option, and that would simplify things, and that would reduce the time associated with funding and so on. So the question is, why would somebody visit your shop? And the answer is because he makes money. So if I'm a guy with crypto and I want your cash in your shop, well, if I can sell my crypto for you above the market rate, well, I'm going to go there because I'm going to make money, right? So why wouldn't I? The same is true, if you have a lot of cash, I can sell my crypto to you and make it, a premium on that as well. So the point is that there is a profit incentive for, individuals. In our case, we're working with the different market makers in the different markets, to be able to go to the shops, and they are willing to pay a premium to take those balances off your hands, whether it's physical cash or whether it's a digital balance in BitSpark. And that would alleviate the need for you to do anything. You could just sit in your shop and people just visit you. Does that help?
Yes, yes, it does. The last question, please. The how is, because in previous slide you said the value of the crypto is fixed and is highly regulated. So how does it exchange in the countries with their respective local currencies? Isn't there still what we experience in currency trading dynamics today, where there is the risk of volatility in any currency? So if the cryptocurrency is highly regulated, and the currencies, the individual currencies across the globe that it exchanges with or that is measured against, and those ones are dynamic. They are currencies that change given certain developments in their respective economies and given government policies and what have you. These currencies tend to go up and down, and as such, the value of the crypto doesn't that imply that the crypto too would have to shift position at one point or the other?
Yes, you're absolutely right. That when I say stable coins, it is like if you have 100 bit rupee, right? Now, the actual rupee in the real world, maybe that goes up or down. Maybe, the government of that country makes an announcement and it affects the price of the actual rupee, right? So when the rupee is measured against US dollars or gold or something like that, then maybe it does fluctuate against that other thing. But as far as you're concerned, you have 100 rupee in the system and it's good for 100 rupee. So it doesn't matter what the price of that rupee is, it measured in some other currency. The fact is that you have 100 rupee value in the system, and we can pay you out 100 rupees of value, whatever that value is. So what we're saying is that, yes, normal FX stuff, trading currencies, being aware of, different moves in the real world, how does that affect the different currencies? That will still take place, absolutely. But being able to access them and being able to move them around is so much easier, because often many currencies you have to go via USD, right? Whereas with this you could go direct, and sometimes there are good cost savings for that. And another quick note as well is, in some, I mentioned this last time as well, but in some countries and corridors, there's a premium for the different currencies, or maybe there's a discount. So if there's a lot of people buying, let's say a stable USD, right? Then that means that the price of that stable USD, well, maybe that goes up for a short period of time. And that coin, that stable USD coin, maybe it's worth 1.01 USD or something like that. So you could actually redeem those coins for a benefit, something along those lines. And it incentivizes traders to look at these different markets. And this is what happens right now in the stable coins is, I know that I'm going to be able to redeem it 1-to-1. So if it's ever worth anything that's not 1-to-1, then there's an opportunity there for me to make some money. So, if I'm a trader and, it's worth 0.99 or 1.1 or something like that, there's an opportunity there. Either I could buy it or I could sell it, if it's worth more or if it's worth less. And the more people who do that, well, the closer it becomes to maintaining rock solid that 1-to-1 peg. So, in the short term, the price might fluctuate a little bit depending on demand, but that you can always redeem it for the value that's behind it. So whether the price is 0.99 or 1.1 or whatever, that you can at least get 1-for-1 from the person who's backing it, or in the case of a trustless coin, you can always sell it for that price as well. I hope that helps. It's maybe I didn't articulate it that well, but yeah. Thanks. Yeah, I mean, they're great questions. And they there's a more in depth that we can do in stable coins for sure. Yeah, I mean, how they hold the value is super interesting, because ultimately, if I can redeem it 1-to-1, then it's worth 1-to-1. But if I can't, then it could be worth 0. So ultimately, what matters is what can you redeem that coin for? Is it can I get the 100 rupee for my 100 bit rupee coin? That kind of stuff. That's the important thing. And the question is then, okay, how does the redemption work? And that's the difference between trusted and trustless. So in the case of trusted, that might be through a bank, through a company. In the case of trustless, well, you can redeem it for the crypto behind it as well. Awesome. I'll just check chat again and see if we have any more. Any more questions? Let us know. Otherwise, Amer or Reshma and Osama, if any thoughts, comments?
Yeah, this was a good session, and thank you, Daniel and Mohammed, for your questions. I hope you found this session useful. So it's actually very straightforward from your perspective as RemitONE clients. If you wish to, enter this realm of blockchain and cryptocurrency, as George very eloquently demonstrated, not only is the process easy and simplified through the RemitONE BitSpark route, it also can allow money service businesses stroke banks who are in the money service business to make additional revenue on a per transaction. So with these two fine, a lot of information. We have one next week. And if you want to take
sorry, Amer, it's breaking up a bit there.
Details. This is a very big opportunity. What can be done here? Oh, sorry. Hello?
Sorry, Amer, it broke up a little bit there when you were talking. Maybe you could just say the last part again. It was a bit crackly.
Oh, sorry about that. Okay. So all I was saying is that we have one more session coming up next week, which is the final session, but it doesn't mean this is the end of the discussion. We hope that you found these sessions useful, and at any time, if you need more information, please feel free to contact myself or George. You have our contact details. There's a lot of talk in the remittance industry about blockchain, and obviously those that are early entrants will benefit a lot. And we would like to, we are here, George is here, RemitONE is here, of course, and we're here to help you take advantage of BitSpark's network and see, where we can go. But two things to keep in mind, once again, I'll reiterate, is the if you go back, George, can you bring up the diagram, please, just for the sake of my client's convenience, so they can visualize it. So it's actually what George explained is there is no need for RemitONE clients to terminate any relationships with their processing banks or delivery banks, stroke payout banks. There's no need to do that. There's no need to change their workflow process. All we're doing is, if you take Daniel, Daniel, your company, the company you work for, all you need to do is sign a contract with BitSpark, and that's it. It does not impact your process at all, your workflow process. It'll be business as usual. The only thing is now you're routing some of your remittance transactions through the BitSpark network. The mechanism used, the mode used to move funds the stable coins, etc., everything that's handled by BitSpark. From your from the remitter's perspective, he or she doesn't really care, right? So the process is very straightforward. You're just bypassing the whole banking system via the stable coin network, as George explained.
Yeah, I understand.
Perfect.
Yeah, for sure. Couldn't have said it better myself.
All right, guys. Any other questions for George or myself or Reshma?
I think we're good. So yeah, looking forward to see everyone for next week. And yeah, if you've got any questions, as Amo said, just let us know. But
Thank you.
have a great evening, everyone. And yeah, have a great time. We'll see you next time.
Thank you very
All
much.
right.
Thank you. Take care.
Yeah.